Yesterday, the euro and the British pound gained value driven by US GDP growth data. The US economy expanded by 1.6% in the first quarter of 2024, below market expectations of around 2.5%. Although bears tried to drag the quotes down, the risky assets managed to briefly pare losses. Today, the euro and the pound sterling still have a lot of upside potential. They are likely to extend gains, especially if statistics turn out to be positive. Today's macroeconomic calendar includes data on the Eurozone's M3 money supply and household lending. However, these reports are of secondary importance to traders. All eyes of market participants will be on the core PCE price index, which is the US Federal Reserve preferred measure of inflation. On the yearly basis, the indicator is estimated to have risen by 2.6% in March after gaining 2.8% a month ago. The monthly core PCE index is forecast to have risen by 0.3% in March, matching February's increase. If the readings are above economists' consensus estimates, the US Central Bank will have to revise its monetary policy stance. With yesterday's data showing a slowdown in US economic growth, the regulator will be forced to cut interest rates. However, policymakers will find themselves in a difficult position and should proceed carefully. On the one hand, higher interest rates have a subsequently negative impact on the US economy. On the other hand, the inflation rate is still far from the Fed's 2% target. Alternatively, if inflation eases and the core PCE index falls, the Fed will most likely leave its policy unchanged, even despite signs of slower economic growth. In this case, the focus will shift to data for the second half of the year. Traders may also take notice of data on US personal spending and income. An increase in consumer spending and personal income amid a resilient US labor market will underpin inflation. A decline in these indicators could help reduce inflation, which will allow the US Central Bank to cut interest rates this year. Furthermore, the University of Michigan's Index of Consumer Sentiment is due out today. The indicator is expected to come in at 77.9 for April. The university will also release data on inflation expectations. A rise in this indicator could support the US dollar. Now let's move on to the technical analysis. As for the euro-dollar pair, a decline followed by a false breakout at 1.0717 will generate a buy signal. In this case, the European currency will extend its bullish run to 1.0754, where bears are expected to regain control of the market and push the price back down. If the price breaks below 1.0716 and tests it from the bottom up, the euro will dip to 1.0682. A false breakout at this level will create a buy signal. Long positions on a rebound can be considered in the event of a deeper slide to 1.0639 with a view to catching an intraday correction of 35-40 pips. In a bull case scenario, if the price breaks through and consolidates above 1.0754 amid weak US statistics, the euro will have a chance to climb to 1.0779 and 0.798. At the level of 0.798, I recommend going short on the rebound, expecting a 25-30 pip move. Going short at 1.0779 and 0.754 will only be relevant in the event of a false breakout. Speaking of, the British pound is likely to decline to 1.2478. A false breakout at this level would generate a buy signal. Alternatively, if the price breaks above 25.24 and tests it from the top down, sterling is expected to advance to 25.73 or even 1.2621 after the release of US data. At the level of 26.21, it would be wise to go short on the rebound to catch an intraday correction of 35-40 pips. Short positions at 1.2573 and 25.24 can be opened on a false breakout. In this case, the British currency is likely to fall to 1.2478. Moreover, if US statistics signals Data signals an acceleration in inflation. Sterling may well dive to 24.28 and probably 23.83. At the level of 1.2383, traders are recommended to go long on a rebound, counting at a 35.40p price. Going long at 24.28 and 1.2478 will only be relevant on the false breakout. Good luck and have a great weekend.